Two and one. And we are live. What's going on, everybody? Welcome back to another podcast stream with Mr. Thomas Farrer. We come on each and every week, talk about all things going on in these markets. There is a bunch of things going on. Of course, the war is top of mind for a lot of people. There's also been a bunch of crazy stories out there, whether you are in the equities world, if you are deeply invested into the ETFs, if you're deeply invested into the crypto world, into Bitcoin. There's a bajillion different stories we're going to talk about. Some really interesting stuff. SpaceX comes out and they're announcing their IPO. That's coming out in April. That was a huge story. There's a bunch of stuff going on around Tau, some crypto that everyone's upset about. All the Bitcoiners are mad because they're saying this is a VC pump and dump thing. We've got gold underperforming against Bitcoin. Bitcoin doing very well since the war began. We have Franklin Templeton launching 24/7 tokenized ETFs. We have the CEO of BlackRock, Larry Fink, talking about a global recession. We have Gary Gensler coming back and talking about stablecoins, destabilizing the banking system. We have gold's number one shiller, Peter Schiff himself, talking about tokenized gold. We had macro data come out from Mr. Jerome. There's honestly so many things. NVIDIA's CEO, Jensen Huang, saying that we have indeed achieved AGI. So we've got quite the lineup of stories to talk about. Hopefully we get to them all. And we've got the legend Thomas Farrer on stream with us today. Thomas, how are you, sir?
Yeah, I'm doing good. Good to be with you. There's a lot going on.
Yeah, I was going to say, there are too many stories maybe at once. Look, for people who are just tuning in now, please take a second and repost the stream as we get this show on the road. If you haven't already, quote tweets, tagging a friend, repost, they all help. And definitely follow the ETF tracker if you haven't already. We're going to dive into this thing here. First story on the chopping block I wanted to pull up for Thomas. He just brought this up to my attention. I thought it was really interesting. I'll let you introduce this one, and we'll get the show on the road.
Well, look, this is one of those shows you some of the retail froth in the market at the moment, right? So basically, there's a way to get access to the underlying, which is like Anthropic and some of these AI stocks. Fund which has like through the like a VC fund has been able to get access to these private market shares, and the fund itself is trading on the stock market. So while Anthropic and OpenAI and these companies and SpaceX are not trading on the market, but this fund which owns these stocks is. But what's wild about it is that, so this became apparent, and this fund which is trading is 10 bagged in a week. But the thing is that the actual amount of is so distantly massively underweight relative to what is trading in the market. So basically, it owns about $20 worth of stocks of these, like, SpaceX and these cool companies, but it's trading at $500 a share on the market. So it's this, but it's very, very reminiscent of the Bitcoin treasury story that we saw about a year ago, right? Where you had these companies trading at 20 times their Bitcoin NAV. It's a similar thing. They own about $20 worth of Anthropic, SpaceX, etc., but it's trading at $500 a share. So you can kind of see it's just basically massive retail froth, speculative pump. It's pretty interesting because it shows you, we're not like, this is happening in the middle of like this supposed like maybe risk off war situation, but actually there's always a spot, there's always a moment for some investors to catch a pump, and I think people are chasing this. It's going to, like, there's no question it's going to crash and burn. It's a bubble, right? It's an absolute bubble. But the thing that's funny about it is that once you get off into this speculative mania, you don't really like it's because it's so detached from any reality. There's no real proper price for it except maybe 1/15 of what it's trading at. But what that means is if it can go from $300 to $500, it could go to $1,000. Like what it could go to $2,000. It's so detached from any kind of fundamentals. It's just but equally, when it's all said and done, it's going to drop 95%, something silly. And yeah, I mean, I think it's interesting because, part of it is just showing like the kind of excitement around getting into these kind of AI companies, but mostly it's just some clever people like, oh, we'll figure it out. We got a bubble here, and let's make some money off it. It does remind you of there's the old saying, some people recognize a bubble and they're like, oh, stay away, and then other people like, oh my god, that's a bubble, jump by. So because it goes, once if you get in early and get out, it works. But of course, the studies have shown, when you look at like stock market bubbles in general, something like 95% of people do lose money on it, right? Because it's typically you only, it's like this podcast, right? We're talking about this now after it's done some stupid 20x. You only hear about these things once they've already exploded in price in general, and then it's we can come back to this in like a couple of months' time and be like, oh yeah, remember that?
Yeah.
It's trading at $35, but I mean it's entertaining to witness.
Yeah, 100%. No, this is how it is, and like people have been talking about it with the war too. Like they're like, dude, this is on some level. They're like, there's like a sector of people / group of people who are just pocketing. Like no matter what the situation is that we end up hearing, whatever the story that we're spun up, and the reasons we're given for literally anything ever, it's just like a transfer of wealth for certain people. They're just pocketing money no matter what the situation is. Doesn't matter if it's war. Doesn't matter if it's AI. Like we talked about this in the stream yesterday with Thomas, or with Robert and Joseph, and we were speaking about like there was a period where AI and was like the main thing. Like, oh my god, like there were all these job layoffs that it was exploding. Like AI is taking over all the jobs. Like Amazon was laying people off. Like everyone was laying people off. And then we just like war hits, and then like nobody cares, and nobody's talking about AI taking these jobs, but nothing changed, right? They continued to do it, and it almost gave them extra reason to be like, hey, why don't we cut 35% of our workforce? We're about to go through a recession. And it's like, oh my god, dude, like this is crazy. They're just layering on. I don't know. It's kind of mind-boggling when you zoom out. It's like you zoom out too far, it starts to get heavy. You're like, oh my god, I don't think we're supposed to be zooming out this far. This is a really interesting story here, Thomas. There was another one here that kind of ties in nicely with this one. Let me see if I can find it here. This was, and I guess I want to get your thoughts on this. Let me see if I can find it here. So I guess this one's more related to the AI side of things, but let me know if you can see this. Hopefully this pops up. Okay, perfect. This is NVIDIA CEO, Jensen Huang, saying we have indeed achieved AGI.
I think it's now. I think we've achieved AGI.
You think you can have a company run by an AI system like this?
Possible. And the reason for that is this: you said a billion, and you didn't say forever. And so, for example, it is not out of the question that a Claw was able to create a web service, some interesting little app that all of a sudden, a few billion people used for 50 cents. I think it's now. I think we've achieved AGI.
You think you can have a company run?
So yeah, I don't know. I think it went in line a little bit with what your last post, which was like these tech funds that you mentioned with VCX and being able to get into like any of these types of projects, just getting exposure. But no, okay, that's a good point. Okay, go ahead, go on with that.
Well, I mean, this is it. I think it's fascinating that this guy has got a multi-trillion-dollar company, and he's pumping it like it's a like it's a we've got AGI, we're here, but it's actually silly. And I mean, I'm like a big fan of these AI tools, but we clearly don't have AGI in terms of I mean, the chatbots are regularly very stupid. like there's not AGI in any of the kind of sense of what AGI actually means, of what we've ever seen. I mean, what it is, it's a guy that's like, it's look, it is reminiscent of you got the McDonald's CEO that's like, oh, burgers are the best thing ever.
The best product ever, he says.
Yes, the best product ever, but it's even like, oh, we're going to cure world hunger with this. Everybody needs to, or like you see, for example, in those the fat drugs, you know, they're like GLP-1s,
Ozempic, you talking about like losing
Ozempic
weight?
and all that stuff.
Yeah.
But they'll also tell you like, oh, it's gonna cure your cancer, and
Right.
it's gonna do, you know, they'll start layering on like it's gonna do these 50 other things. And when you look at the AI company, like when I hear like, oh, it's going to replace all the jobs, we've already got you know, part of me wonders like, is this really just going like, yeah, buy my product? I mean,
but it's like it's that fund that you mentioned. Like they're almost always in marketing mode, and they almost can't help it because what they're talking about, just by nature of speaking about it, is marketing. Like him just being on the podcast, and the fact that everyone's incentivized to post clips like this, like including myself, to get views, to get people to come to your channel as well, and to get discussion, just like we're doing. Like maybe we're the suckers on stream talking about it here, but at the same time, like, dude, you're an investor and you're looking for opportunities, and you're like, okay, am I gonna try and hand select which specific stock is going to win, or am I just going to pick a growth stock ETF and just pick the best ones for AI? And there's going to be here 15 of them right in here. I think there's going to be a ton of that.
And if you really believe that, like we've got AGI here, that's so world changing. You know, you couldn't, you'd buy Nvidia at any price if you thought, but it's not really, and it might still happen, but it certainly isn't true today. And I actually, the thing is, I have this real weird dissonance because I am so impressed with the AI products that are already in existence, and I do think they're going to be so world changing. Just, you know, like as tools, they're amazing. But when I see the hype and the pump, it actually makes me dismiss it more. Like if they were underselling it, I'd be more like, oh wow, there's something really here. But when I see them come out and be like, you know, like for example, the AI companies are massively increasing the headcount of their businesses. Like they're hiring tons and tons of people while they're like, oh yeah, AI is going to take all your jobs. There's like a dissonance there. Yeah. It's like, well, why aren't you using AI to do the work? If the AI is so good, why do you need so many people? And you're telling me, oh, AI is going to take all the, you know, AI is replacing engineers while you're hiring engineers.
Yeah.
It's I don't know, and it's confusing. And also it just shows you, one of the things that's interesting is that it just shows you like the human psychology of like never enough, in the sense of, think about this psychology of a man like Jensen, who's worth hundreds of billions of dollars. You know, he's got the most valuable company in human history. Not like nothing has ever been more valuable as Nvidia, and yet still got that urge, like gotta pump it, pump it, like gotta get on it. You know, it's fascinating.
But you have
but
to.
Of course, he wouldn't be
like the flywheel only continues if you keep running on the. I don't know. It's okay. But
if the product speaks for itself, you shouldn't have to, maybe, but it's interesting.
I don't know. I feel like we're in a world where that's not one of the options. You got investors now. You understand if you just keep talking. It's like Elon, dude. Brother just keeps spinning up new companies. Each one's cooler than the next one. Now, you know, years later, now they got a SpaceX IPO coming. It's going to be probably the most hyped IPO of all time. I imagine if you're buying it at these levels, at some point you're probably going to get that return. I think most of those returns probably have already. I mean, I'm sure if you're buying in at the IPO, I don't know. It's hard to make the case because you look at something like SpaceX, it's going to be so valuable one day. It's like, yeah, but you know, I think a lot of people who are investing are maybe looking at like a Bitcoin, and they're like, oh, so I'm getting Bitcoin at $100. It's like, well, SpaceX is kind of valued at a pretty high point already. I don't know, it's interesting. Let me know what you think about this clip here. So we've got Larry Fink, CEO of BlackRock, the biggest asset manager in the world. The brother is the advisor for like all sorts of presidents. He's like a main player in the game. And here he is talking about the war in Iran, the conflict with oil. He's saying if we're going to have years of $100, $150, $200 oil, and if Iran remains a threat, we're going to have a global recession. Those are some pretty powerful words coming from Mr. Larry Fink.
If there's a cessation of war, and yet Iran remains a threat to trade, a threat to the Straits of Hormuz, then I would argue that we could have years of, above $100, closer to $150 oil.
What happens to the global economy if that happens? How do we see it?
We'll have global recession. If there's
Dude, I don't know. That's wild to hear to me. That's just like, brother, what? So I don't know. It's tough.
Yeah,
it's
so
tough. I know he's got his own motives. He's got his own fund as well. So like we all know he's not a unbiased figure in this. He's very much a player on the field, but still wild to hear.
Yeah, I mean, I wonder what he's suggesting. The sort of the implication there is that he really wants, this is if Iran remains a threat. So what is he arguing for? More war to really take them out, I guess. Well, I don't know. It's tough when you only see a little bit of a clip.
That, or he just wants Iran to just sort of lay down their arms and just be like, we give up, whatever he wants. That might be it as well.
I mean, there's no question. Unlike, we watched. I think it was last week, or maybe the week before. We had this clip about Tom Lee saying that, if a high oil price is actually great for the economy and great for the stock market.
Yes.
Which was, very, very stupid. So I can at least respect what Larry is saying here, which is the honest truth, which is, it's going to cause a recession, right? If oil prices remain this high because of the war dynamic, and it's going to have huge political implications downstream. I mean, the Republicans are going to get smashed. The Democrats will come rushing in and take over. What happens there? What policies does that lead to? If you think about sort of broader picture, like the bigger picture dynamics at play here, it could be quite significant. But it's also, we kind of have to like shrug our shoulders. It's a weird thing, right? Where we're all like, it's kind of a crazy situation because none of us can do anything about it. We're all watching these clips, and Trump's tweeting he's going to nuke Iran to actually no, we've got a deal, but then the Iranians are like, actually we haven't even talked to Trump. So it makes it so hard to invest because even when things get cheap, you're like, well, this looks stupidly cheap, but don't know. And it's a really interesting dynamic because there's kind of nothing you can, like, the only way to really play this is to kind of just assume a distribution of outcomes and assume like, it'll probably work out. There's a chance it won't, and kind of play it based on that. It's so tough. The thing is, we were talking all like before the call as well about how gold is down, and there's this weird dynamic going on, right, where suppose like if oil is up, inflation is higher, that should theoretically be good for gold because gold is this inflation hedge. But also equally, inflation goes up, interest rates will go up. And interest rates are higher. Interest rates is going to be bad for gold. So you've got this weird like propeller dynamic happening where it's like what the market is looking through one thing but not something else, and you've got gold as this speculative asset that's already run hard in appreciation of a lot of these threats that are coming. And in some ways, it's fascinating how when you look at the market, it seems like gold is doing this. I don't know, buy the rumor, sell the news thing, where it was like it's been looking for a long time. It's been pumping so hard recently, and then now we've got these outflows. Yeah, play the clip because this is interesting.
Yeah, this is an interesting clip. That's a great transition here. So we have Bloomberg senior ETF analyst saying the roles have been reversed, at least recently, with Bitcoin outperforming gold since the war started.
This is interesting. Both of the big gold ETFs seeing outflows. A lot of people were kind of dumping on Bitcoin for not being the safe haven store of value about 2 or 3 months ago, and gold was. Well, the roles have been reversed. I think you shouldn't really judge these assets over a couple weeks or months anyway. So I think both are store of values. One's just a little more sturdy, one's a little younger, but they work in different ways. They're more like zero correlated, not inverse. This is interesting.
Yeah, I think it's a pretty good point, but it is interesting how for so many years Bitcoin has been dumped on. Like, how can a Bitcoin be a safe haven when it just falls? It can fall at any point. Gold's down like 15% in the last 2 weeks.
Dude, it dropped like $1,000. It was at 5,000. It dropped all the way to 4.1K. I was like,
yeah, and that's wiping out like $4 trillion of market cap.
An insane amount.
Yeah, that's so much wealth being destroyed there. I mean, admittedly, after it's been created recently too, but I think that it kind of shows you, right, that so much of this is like speculative money, frothy stuff. And also, I just think, honestly, it tells you how hard the game is. Because if you use all of the big, you almost need to go like counter narrative. Like the narrative is like, oh yeah, war will be good for gold. But then actually, as soon as the war breaks out, gold tanks.
Isn't that crazy, dude? It's like, who was saying it? Why were they saying it? It's like can't even remember. Like, it's like literally smoke and mirrors. Like, someone says something one day, then another story comes in, and by the time you've made your mind up, another story comes in, and then your assets moving again. You never know what's affecting what anymore. I think that's why so many people have shifted to honestly just doing TA and been like, let me just react. And if I know where the levels are, I can probably piece together a story afterwards. But trying to like predict and make moves off these fundamentals, it's starting to get ridiculous. Like, you never know when Trump's going to put out a tweet. And if that's kind of half your strategy is reacting off that, like, you might be toast here.
Yeah. Well, the other thing is, like, gosh, there's been such a filthy amount of insider trading that's been happening in the markets recently. That like that recent tweet, there was some good stuff showing some insiders like 5 minutes before Trump tweeted out about how he'd come to a new
I saw this
new deal with Iran. People had dumped oil futures. They started buying up, like going long the risk assets. Like, and of course, he tweets and things out, and they make a metric ton of money on the trade. And it just like it's so brazen and such a joke, right? It's like they know that they can just get away with anything. It's actually hilarious, but also it just shows you like, oh, there's some filthy markets at the moment.
I think these guys just get out of the room. They wrap a meeting. They're like, okay, so this is going to happen tomorrow at 9 a.m. They call their sisters, brothers, cousin who's got a deal with them. He's got a massive $14 million funded account because it's their money. And they say, okay, look, you're going to get 10% of no matter what we do in here. All you have to do is hold it in your name. And we have a burner phone. I'm going to call you. You're going to sell these things. You got $14 million or $14 billion in that account, whatever. And they just front run these things. I think they just like do it like that, where it's a trust owned by a person's friend's cousin. And they just essentially have insider trading. One of the things you had actually pulled up was this, and there's been multiple stories recently. Tau was big in the news, and people are saying, oh, it's a coordinated VC pump and dump. Don't believe it. You brought this one up to my attention in terms of Zcash, which I also remember very similar. A lot of people just all of a sudden start tweeting about Zcash. All sorts of reputable people in the space saying, hey, they're like, start looking at Zcash. And I haven't heard about it since that 1 week. Tell me a little bit about what this is about.
Yeah, I mean, can we also pull up the price chart if you can? Because this is but I mean, so Zcash is this dead coin. It's had its time in the cycles from like crypto cycles from 2017. It's basically been bleeding for 10 years almost. Give it. Yeah, you can see what's happening here. So
oh my goodness,
it had
gracious.
So it as I said, it had its 2017, 2018 cycle, peaked at $800 back back then, but essentially bled out to nothingness down
No
to $25,
volume at
$30.
all, dude.
Yeah, no volume. And then all of a sudden, a coordinated pump pumps to $600 higher even. And you had all of these really big names and like respected guys, right? Like Naval and like a lot of even like some really big time podcasters. Like I saw the What If Alt Hist, like it's a big time history channel on YouTube. Just like a lot of people, clearly like a coordinated influencer pump. We're going to pump this one specific token, Zcash, and it exploded up in price. Did it very successful pump and dump. And then, now it's down sort of 75% since then. But I think one of the interesting things, and there were other stuff along the way, like you had exchanges that had delisted the coin because it was such a dead coin, and then at the top they relisted just to get retail money to buy their bags. But I think what's a little bit more interesting, possibly nefarious, what's interesting about the Zcash pump and dump, that is why that, like, of all of the tokens they could have, because basically it's this cabal of guys that have come up and been like, hey, we're going to create a pump and dump. Let's pick one thing. We'll pump it up and then we'll dump it.
Yep.
Classic move. But what's interesting is, why did they pick Zcash as opposed to any one of the, there's hundreds of potential, dead coins they could have picked in the history of crypto, right? They could have picked any of them. But why do they pick Zcash? Because Zcash is a privacy coin. Essentially, it's you can't track it, which means if this was happening in some other coin, you could track the wallet movements, and so you could see, oh, these guys have been buying up these bags and now they're dumping at the top, and you'd have guys tweeting about this on X at the time, going, oh my God, look at this wallet movement. You can see they're dumping on the top. You can see that, just in the same way, first of all, not in the same way, but anytime there was a big whale movement of Bitcoins, you heard about it, right? Like, yep. when a whale moved $1 billion of coins woke up from 2011, whatever, you heard about it. In this case, they were able to do it in secret because it's a privacy coin. Nobody can see the coin movement. So nobody realizes that like 95% of the supply is held by, a few guys that have bought up all the coins in preparation for the pump. And then they do a massive pump, massive promotion, and then dump it on everyone. And nobody knows, nobody can see, because there's no transparency there. It's the opposite of transparency.
Yeah.
So it was a pump and dump, a classic pump and dump. What's interesting is that this stuff used to occur all the time back in the day, and I'm talking like well over 100 years ago, or around 100 years ago, in the 1920s in the stock world, right, like sort of in the lead up to the 1929 crash. This wasn't even considered this is just considered like one of the strategies you could do. They call it pooling. Like, it was like, oh, one of the things we'll create these pools and we'll pump a thing and then we'll dump it together. And it was just like a sort of it was kind of like a hedge fund strategy, but they didn't call it pump and dump. They called it like this pooling strategy. And then over time, security laws came in, were like, you can't like just dump on retail like this. Like, this is a scam. You're just scamming people. Yeah. And so securities laws made it illegal. You can't do this stuff without you can't do this in listed securities. Like, it's illegal to try and if you to replicate what they did with Zcash, if you were to replicate that for, say, any kind of some random stock on the stock market, it's like, oh, straight to jail. That the SEC will say you've committed securities fraud. But crypto is in a different world. It's a wild, wild west, and it is what it is. I mean, I don't necessarily feel too much about it one way or the other. I mean, I think it's quite entertaining in some ways, but you do witness these absolute hustling scams that happen, and this is basically what it was like 100 years ago, and
Yeah.
especially in the Trump administration, because they essentially made this legal, like confirmed it was legal. So yeah, it's entertaining. I do think that some of the influencers that were part of it, but they really should get like, I would like to see proper backlash against them, in the sense of, at least, like, not backlash in the sense of, like, at least just like called out for what they're doing, in the sense
Some
of
accountability.
yeah, because I feel like some of these guys are like tech entrepreneurs that are like, oh no, I'm really like, actually, I'm this, I'm a tech philosopher over here, and it's like, but wait, are you just doing pump and dumps? Like, you like,
Yeah.
it's
So I think some of them just get suckered in because they're like, oh, like I believe that enough to pump it. But they're not like necessarily nefarious about it, but they kind of are. Like, they know it's not probably the best thing ever. I don't think they link the fact that other people are going to literally, like, I don't know what they think, but I'm like, I mean, like, when I see things like this, I'm like, dude, you lose your money in that, you deserve it. I'm like, you're an idiot for putting your money there. Like, it's like how I look at when I walk through a casino. I look at people losing their money. I'm like, dude, you are an idiot for sitting at the table. You know the house is going to win 9 times out of 10. You're the idiot you're like the sucker who sat at the table. But at the same time, you got to hold these people accountable, because you're like, dude, this is probably a bad idea. It's not like you're just selling product at Walmart, and if no one buys it, oh, whatever, we'll just pull the product off the shelves. It's like, no, people invest in this idea, and 2 weeks later, it's probably never going to go anywhere, but who cares, because you just cashed out $6 million. And so, yeah, I agree with you. It's not the thing is, the incentives are just misaligned. If the incentives are screwed up, it'll never fix, and the people who are supposed to be holding them accountable don't have proper incentives to bother holding them accountable. Nothing ever changes. And I think this is why nothing ever happens.
Yeah, look, I think it's an interesting point you make. I mean, how much do you just say, hey, no crying in the casino, versus how much do you actually
say
hold
both, I
people
think.
accountable?
Yeah, I think you have to do both.
I think it's reasonable to say both, and it's reasonable to look. I mean, something might be illegal, but it doesn't make it moral. And I mean, if you're witnessing people trick, kind of like tricking their followers or whatever, you're like,
yeah, it's definitely not good.
Yeah,
100%. There's
that's, I think,
there is where's the clip I was going to find here? So, speaking of the incentives, this is an interesting clip. I thought this was an old clip. It's actually new. This is Gary Gensler, and he went back on, and he's talking about stable coins here. And he says stable coins are going to destabilize the banking system. Do we really want to do that? Basically, is what he said. This is kind of just circulating all over the timeline. Basically, and this is going to kind of transition us into this, a few minutes at least, on the stablecoin talk, and the new update on the Clarity Act, which essentially renders stablecoins useless. And it's interesting because, like Kathy Wood had amended her entire Bitcoin thesis based off the fact that stablecoins are going to end up taking a lot of the attention off of Bitcoin, because people could just buy the thing, hold money in stables, and just earn yield on it. Essentially, what the new Clarity Act update did was negated all that. You now can't just hold stablecoins and earn yield. As an effect, we saw Circle drop, and Circle's behind USDC. We saw Coinbase drop. They're a huge proponent. Obviously, there's a bunch of people have stablecoins sitting on Coinbase, and now it's just not going to be earning them yield with these new updates. And so people were not happy about this. And someone who has starkly been on the other side and not exactly been a fan of crypto land, he comes on and rubs a little bit of salt in the wounds. I believe this is before all this came out, but here we have Mr. Gary Gensler.
I do have some concerns about what, with interest being paid on these new forms of money, stable coins, does it undermine the banking system? And that's something that Congress is sorting through now, really. Do they want to destabilize the banking system by allowing the interest to continue to be paid on these so-called stable coins?
Yeah, so of course, I mean, the incentives are screwed. The banking system has no desire to why would they bother letting this happen? And it's like, dude, if they don't, I mean, yeah, you're going to get a Clarity Act. It's not going to be anything. It's not going to be clear on anything that you want to happen. It's just going to shoot down anything that doesn't help. I mean, to take away all of their benefit of just, them collecting fees for doing nothing, it makes no sense. It's like, hey, put yourself out of business. Like, why are you not doing that? It's like, because it would put us out of business. And so I don't know. It was a really interesting clip there. Let me know your if you have any knee-jerk reactions off that.
Well, the thing about the banking system is that we've got this situation where we have the Fed guaranteeing bank deposits. So you know, when you have when you put your money in a bank in the US, it's sort of understood that, I mean, notionally the guarantee is only for 250,000, and theoretically you could lose more of it. But even when we had this situation in 2023, banks started going under. The Fed basically said, no, we'll guarantee it all.
Exactly.
And so what that means, what's really important about that is, if you can't lose your money in a bank deposit because the government will guarantee it, it creates this. Well, first of all, what it does is it means that the banks have kind of a license. Theoretically, what it would mean is the banks can then take risks with your money because they take the deposit and then they invest it. And hey, if they lose the money, it doesn't really matter because the government will take it, guarantee it, and it creates a principal agent problem. But then the way to get around that is they have all these regulations about what the banks can do with your money. So we have this extraordinary complex banking system where the government guarantees your bank deposits, but then the banks are very limited in what they can do, and they have to have these, basically invest in what are called high quality liquid assets. Essentially, you have to buy US treasuries and this kind of stuff. But when you alternative banking system, like with the stable coins, it's like, do people understand, like, yeah, you can earn whatever X% interest rates on your stable coins, but maybe they're not actually guaranteed. Like you can't, it's basically, you can't have these two worlds. It's really difficult to mash them together because can you have these existing world, like, can you have a world where, yeah, go off and run and do your stable coins. By the way, they're not guaranteed by the government. By the way, there's like risk attached to them and all this kind of stuff. And does retail actually understand that? And then if you do want to mix and match and just say, no, it's fine, it's all one world and let it happen. It's like, who's taking the risk there? You know, who's going to be left holding the bag if something goes wrong? I think that's why it is really complex. You know, Gary Gensler gets like a really rough rap on Twitter.
He does.
And I don't think he was right about everything. Like, he should have just like let a Bitcoin ETF happen. I think that was stupid.
Let a Bitcoin ETF happen.
Could have
a lot of headaches.
He fought that for so many years, and it was and now everyone looks like that was stupid. Like, what's that. But at the same time, I think he actually had some legitimate concerns, and it's tough because you want, the world wants, like, people want things to be black and white, but actually there's always a lot of gray here.
Agreed.
But yeah, this was it's an interesting video.
Yeah, I agree. And one thing here and we'll jump into some of these charts here in a second, but yeah, I thought this was an interesting clip here from Morgan Stanley. So they're the first major bank to offer to issue their own spot Bitcoin ETF. And I'm not going to play the full clip because it's a couple of minutes. I don't remember exactly where she said this, but she said more Bitcoin and crypto holders, they're thinking, are going to move into ETPs, exchange traded products, and we're able to offer them services around that. So I think this is, and I don't know exactly when this was said. I don't know how much information she had. The only reason I bring it up is because of what just happened with the Clarity Act. If people aren't able to just earn a yield holding stable coins, they're going to do exactly what what Morgan Stanley just said here. They're going to find ways to have their money. If Bitcoin is the asset of choice, for example, they're not like a OG Bitcoiner who wants to hold self-custody. They're going to hold it in whatever place they can. And that platform is going to be like, okay, how many ways can we offer incentive for you to hold your Bitcoin and crypto in our pocket here? We will find ways to get you, some level of generating of yield, which maybe, in turn changes Kathy Wood's opinion again and gets her to say, hey, maybe Bitcoin is going to get the attention back, some of these cryptos instead of the stable coins. And so I thought that was an interesting play there. I don't know if you have any thoughts on that, if you think that's off base, or if you agree, or if you have any thoughts on it. But I thought this was an interesting clip to kind of come out around the same time as all this Clarity Act stuff came out.
Yeah, a couple of thoughts. Firstly, not not shocking. You know, it's interesting. Morgan Stanley, as a financial advisor, they could just theoretically just say, yeah, we'll recommend Bitcoin and we'll recommend Goldman Sachs ETF product IBIT, but no, they want to create their own product because they're going to funnel it into their own product, and then they're going to take a clip, probably 25 basis points on the asset. So it makes sense from them as a business. If they mess around with trying to get Bitcoin yield, I'll just say that, you know, this is a lesson that's been learned over and over again. It's very much an FO situation. You can't, like, the challenge of trying to get a yield on Bitcoin is it's like trying to get like a perpetual motion machine. It's not, it's tempting. It's like alchemy. Can we try and create gold? Can we try and get a yield on Bitcoin? But the reality is that Bitcoin is a fixed supply asset, and there's no free lunch. There's no way to generate a yield on it. You can do things like sell a covered call on Bitcoin, which could generate a yield on it. But then, of course, you're giving up the upside of a Bitcoin price appreciation. If you can do these things, but ultimately there is no there's no free lunch. There's no way to just have Bitcoin and have a yield on it without taking extra risk. And without giving up.
They're opposing. They're basically opposing forces.
Yeah,
you know,
it's fundamentally impossible. It's fundamentally impossible. And the only reason why it's even possible in the fiat system is because in the fiat system we have this increasing supply of dollars. So there's like always just a growing number of units. So the Fed is able to offer banks an interest rate because they just create more units out of nothing. And it's like, but unlike Bitcoin, which is a fixed supply, I think that there's actually no way to get around that. And I do think it is good in a adoption sense, because it's going to enable traditional finance. It's going to enable more capital flow into Bitcoin. I think it is great for Bitcoin from a price perspective. But it is going to, the system, depending on how they structure it, like, you know, we could be looking at problems down the line if it creates this, like essentially like a derivative mess of paper Bitcoin. You just, I don't know. We'll have to see. It depends what they do. It's too early to judge, I'd say.
Agreed. Yeah, 100%. You know, one of the things, just to sort of, because I feel like it's right up in there. So we saw, I don't have the thing pulled up, 1 second. So we saw, with all this Clarity Act stuff that came out, we saw Coinbase take quite a big dip here in the last week. It is down over 10%. And I think part of the reason is because of that information. That's a huge reason. That's a huge thing that Coinbase had going for them literally 48 hours ago. We also saw Circle recovered a little bit today. But they're down 20%. And that was like literally, I mean, you can see that chart. That was a pretty rapid decline there. And so we saw, and Circle is behind USDC stablecoin. And so that's a huge reason people even bother holding these stablecoins. Because yeah, it's a little bit easier. It's like one step removed from holding cash. And a lot of them people hold them in Coinbase. And so we saw a couple of these stocks dip pretty hard, which I thought was a pretty interesting thing to catch up on. One thing I wanted to do, because this podcast is sponsored by Rex Shares, and it just makes easy sense, especially in the ETF world. If you guys are looking for some interesting ETFs, they have one here, which I thought was pretty cool, which is CRCD. This is an inverse, 2x inverse Circle daily ETF. They've got a ton of these things, by the way, for people who are interested, especially for the single stock. There's all sorts of options. You can get a 2x long as well. And there's all sorts of ones here, but especially if you're a trader and you saw that and you think, hey, there's going to be even more downside here. If you're able to hop on these things early, I mean, you can make some pretty good returns. We saw Circle have a big dump there, and obviously the inverse Circle is going to have a big rip. And so if you think it's going to keep going up, there's so many options in the ETF world now. Like I was just talking to someone the other day, there's tons of single ETFs, and a lot of them have some leverage on them. There's obviously the one that Thomas brought up earlier in the stream related to just sort of like a broader group of various AI assets and tech-related assets and things like that. There's so many ETFs. There's actually, I think there's an interesting stat. There's more ETFs than there are stocks out there now. And so if you're deeply ingrained in these markets, if you're as nerdy as me and Thomas are, there's a ridiculous amount of different opportunities out there. If you know what you're doing, if you are able to trade these things, of course, none of this is financial advice. And if you are interested, by the way, if you go to the tweet below the stream, or if you're on YouTube, if you're watching, go to the description. You can find their prospectus there. I'm going to make sure to read this out because it is an ETF. And investors should always carefully consider the fund's investment objective, risks, charges, and expenses before you invest. Their prospectus and summary prospectus contains this and other info about Rex shares. And if you want to obtain their prospectus and summary prospectus, just visit their website at rexshares.com. Their prospectus and summary prospectus should be read super carefully before you invest. They are one of the longest running clients. Big shout out to Rex Shares for sponsoring the show today. But I thought this is a pretty interesting one to bring up with all the crazy action we've seen from the stablecoin arena. And hey, there is some pretty, that's 45% in a week. That's not bad at all. And so if you're looking to trade these markets, as OTG, who comes through, he frequents our spaces a lot, there's a bull market somewhere and there's a bear market somewhere. And if you're able to trade, you have a bit of an edge in these markets. And so I thought it was pretty cool. Thomas, I'm not sure if you have any thoughts on this at all, but it caught my eye the other day. So I figured I'd bring it up here.
Yeah, I mean, this would have been for the people that have like really followed that Clarity Act well and understood the implications of what was going on. I'm sure there was a trade possible there.
Yeah.
Would have been really like, you've got to be so deep in the weeds for a play like that. But that's where the opportunities are, I suppose, if you want to get on like trading some of these kind of short-term trade, because that's the thing, right? Something like this, like a real catalyst-based move. It's like, hey, there's going to be a law change. It's going to have this kind of consequence on the stock, and those are the perfect setups for a short-term trade if you understand it well enough. Which, of course, it's not easy, right? It takes specialized knowledge, but well done to the guys that made the trade.
Yeah, 100%, dude, 100%. One of the last things I wanted to bring up here was this here. And I want to get your quick thoughts on this one. Here it is. So Franklin Templeton launching 24/7 tokenized ETFs in crypto wallets. I don't know, dude. It just seems like no matter what we do, we can't get away from this conversation around tokenized equities, tokenized ETFs, everything coming on chain. It just seems like it's the obvious choice if you're trying to bring global access, global liquidity in here. It just seems inevitable at this point, whether or not you want it to happen. 24/7 markets, like it just seems like it's coming. I mean, what do you think?
I'm curious, interesting. I find it tokenized ETF. So that's interesting, right? Because if you like, why would I want a crypto token of an ETF as opposed to, because if the ETF is of a crypto, like let's think about this, right? You've got the Bitcoin, which is, you got the Bitcoin asset, the token, and then the ETF comes along and is like, hey, for the people that don't want to hold this as a crypto asset and want to hold this in the traditional financial system, we can use an ETF. And they're going, we can take this ETF and turn it back into a crypto so you can hold it in your crypto wallet. But if I was going to do that, why wouldn't I just hold Bitcoin in the first? Like, what is? I don't know.
That's funny.
And I'm sure like Franklin Templeton guys are smart and I don't know. It's a curious one. Maybe it's more relevant for tokenizing non-crypto assets. Because obviously, I just don't understand why you would tokenize a crypto ETF, but I suppose you could tokenize a stock ETF, and it's curious. Also, I gotta wonder, like, what happens if you lose your token, right? Like in the crypto world, right? Like, if you lose your private key to your Bitcoin, you lost your Bitcoin, and it's that simple. Yep. What happens if I've got my VOO index? I got my S&P 500 index in my crypto wallet, and I've lost my private wallet. Are they going to be like I'm at a loss for words, honestly. I'm confused. I'm curious. I suspect this is one of those things that they're like kind of throwing stuff at the wall, which, it's like, hey, we'll just see what gets product market fit here. Like, let's just throw this out there. Maybe people will like it. But I don't know. I'm confused.
Yeah, honestly, you bring up a great point. That is sort of like circular, I guess. But I guess it's probably going to be like that. This sort of guinea pig type of, hey, we're rolling these things out. We're not exactly sure what they mean yet. I think they're cool. This reminds me a lot of like when I first got into the crypto space, when I was like when NFTs were still popping off, and I was just kind of getting into the game. And it's like T-Mobile, does a collaboration with Solana. I was like, oh my god, this is it. And that obviously was not it. But it was a thing that happened that week. Whatever, it was fun. And I started to see these things. When the Bitcoin treasuries were coming out, it's like, oh my god, this is it. And it wasn't it. Half of them just have sort of. I honestly have no idea what they're doing at this point. I don't know what they do all day. I'm like, so what are you jumping in meetings? Like you're just sitting around vibing until Bitcoin does something. It's like the meme of the guy with the stick. Like what are they doing all day? So it's hard to know. But I think maybe it's more so like people just want to get their foot in the game. They want to raise money. They want to make sure that their name is one that comes up. If we see a total reversal, I mean, Bitcoin's performed very well since the war started. Maybe they're just trying to make sure they've got a foot in the door as a go-to. I don't know. I don't know how important it is to be a first mover in this kind of environment. It's the first time I'm seeing it. So it could just be that. I'm not sure who's deploying their capital into tokenized ETFs, to be honest. I don't know I don't know anyone who's doing it.
I think part of it as well is, they already have a Bitcoin ETF. They already have some other ETFs, some crypto, more standard crypto ETFs. I think it's just like a branding thing where you want to position yourself as crypto friendly. Because when people associate Franklin Templeton with crypto, they're more likely to invest in their crypto product. I think that's a big part of it. We did see in the past when they launched their Bitcoin ETF, they made the Franklin Templeton Twitter account have laser eyes and this sort of thing. So I think it's kind of, I suspect it's kind of a marketing. Well, I mean, I'm very confident.
Likely.
It's a marketing play here, but interesting.
Yeah, more than likely. Oh, by the way, for people who were interested in the ETF I mentioned a second ago in relation to Circle, I don't know if I may have already said it, but that to get to that link, it's in the tweet below the stream, and if you're on YouTube, it's in the description. By the way, if you are enjoying the stream, if you have learned something or just have some entertainment for the day, definitely take a second to repost it if you're enjoying. Follow Thomas right above our faces. He's tagged. I was going to say, I didn't know if there's anything we haven't covered yet, Thomas, in the stream that you wanted to make sure we covered before we send off here, if it's related to Bitcoin or anything else you're paying attention to. Maybe it's the Bitcoin ETFs, inflows, non-flows. I know last time we covered, it was the worst day to make a post about 8 days straight of Bitcoin inflows, because literally that day,
we jinxed it. We totally jinxed it.
So that's Thomas's fault. Everyone who's watching, you can blame Thomas for that in the DMs. But I didn't know if there's anything else you wanted to hit on.
No, I mean, I think we covered it all. I do think it is really interesting to see the relative performance of Bitcoin and gold, at least over this last little period. At least it's like a reminder of, hey, things might not go exactly how you think it will, because you got a war, all of the guys saying, oh, Bitcoin's the risk asset and gold's the safe haven, and the war's broken out, and Bitcoin's done relatively well, gold has not. Yep. I do think part of this as well is, we are seeing MicroStrategy, although not so much in the last week, but have been buying up a lot of Bitcoin, right? They've got this STRC product. It's had a lot of traction.
That's right.
I do think, potentially they announced, by the way, their intentions to raise another $20 billion with their STRC.
Wow.
And potentially
Where's
another
the money
$20 billion.
Coming from? Right? Does the money come from selling their own common stock, or does it come from investors? I can't remember.
No. So when they raise, they're going to do an equity capital raise. They also want to do another $20 billion equity capital raise. So that would be selling their common stock.
Got it.
But the STRC is people that are essentially the credit investors, people that are looking to see, because what MicroStrategy are doing, and as they're saying, we'll give you a bank-like account, which is, it's not a bank account,
sure,
but the price is supposed to stay flat, but we'll give you 11.5% interest rate on your holdings. So you get for people out, it's an interesting play, because if you think Bitcoin is going to not out, but not die either, then you can go, oh, I can get 11% just investing in STRC, because MicroStrategy will pay you 11% over the course of a year. It's actually like really attractive in that sense. Where things could go wrong is where things could go wrong is if Bitcoin were to completely crash to the floor, you would potentially lose your capital in this STRC. Because, you know, I'm not saying this is going to happen, but if Bitcoin went to like 10K, MicroStrategy would probably have to like massively, the ability to raise capital would be so impaired, they wouldn't be able to pay the interest on their debt. On the flip side, you know, if Bitcoin runs to 150K, you'll still get your 10% in STRC or your 11% in STRC, but you've got to be sitting there thinking like, damn, I wish I just bought Bitcoin.
Yeah.
Like, so where I think the STRC is interesting is if you think, oh, Bitcoin's just going to chop sideways for a long time, then it's like, oh, MicroStrategy will just pay me really good interest rates. And there's a lot of people out there that are like, oh yeah, I'm not that confident in Bitcoin that it's going to necessarily shoot the lights out. But at the same time, I don't think it's going to. So this is like a really high interest rate investment. It's that the yield is super attractive from that perspective. And, you know, MicroStrategy have played with this, right? When they launched the product, they launched it at like 10%. And they were hoping to do it at like 7%. That was...
Yep.
We're going to do this. And we're going to run it at a real low interest rate. It's just what's happened is in order to attract the capital, basically they're going, we'll pay whatever interest rate we need to pay in order to attract the capital. And it just so happens that the market has gone more. Oh yeah, 11.5% sold. I'll give you, I'll do that. But at this level of interest rate, they're finding that people are willing to lend them money. And you know, there is also an interesting dynamic too, where it's in the sweet spot, because let's say you theoretically, like, I got a question for you, Kate, just a hypothetical. Say they were offering 35%, not 11, but 35, just hypothetically. They're not,
Yes.
but just say they were. Would that make you want to invest more or less?
I think a lot more.
Well, hear me out. In one sense, you'd go, oh, 35% interest. This is like way more attractive than 11%, because more interest is more money for me. But on the other hand, you're investing under the assumption that they can make these payments. You have to assume they're not going to default. So the higher the interest rates goes, the more risky it is from the perspective of, like, is this thing going to blow up on MicroStrategy? Like, imagine if they were like, oh, I'll give you 500% interest rates. You'd be going, this thing is going to blow up any minute. You know, like, or 5,000, like it's a weird dynamic where as interest rates go higher, on one sense, like, wow, this is way more attractive. But on the other sense, you're going, oh, is this actually sustainable? Can they do this? Is the business going to be able to raise this money to pay me? I mean, right now they have multi-years of cash sitting in a bank. They can fund the payments. So it looks fairly safe, but there is that dynamic there, which is quite interesting.
Yeah, okay, that's an interesting proposition. What I think he's trying to do is just create a solution to a problem he knows is going to come. I mean, he's trying to get ahead, I think, and he's saying that like half the people. Bitcoin. Yeah, like he's trying to figure out. He's trying to front run the problem with the solution, and I don't know. I like the idea. I think it's cool. I'm not going to be in that first cohort. I'm just not. I don't know. I don't know. Like. Not going to be me. I'm down to watch it and you know, hear from people who are trying it, but I don't know, man. I don't know. I'm more interested in raising my income and than trying to squeeze out as much yield as possible. I just feel like, I don't know. With my luck, dude, the second I get in, the music stops. I just know that's my luck with things like that. So yeah, I don't know.
I will say as well, in the short to medium term, it's great for Bitcoin. If he can raise all this capital and buy Bitcoin, it's going to put buying pressure. The price is going to go up. You know, if he can accomplish, like, the price will go up if he can buy billions of dollars worth of Bitcoin. Now, he might not be able to raise the capital, and you know, stuff like and other forces can happen that can push the price down, of course.
Yep.
But in a vacuum, if everything is going along at a normal level, and this guy and Michael Saylor comes in and is able to raise billions and billions of dollars, that should be bullish for Bitcoin, we would think. So I think it's positive impact for Bitcoin on the short to medium term. On the long term, it might make things more unstable in the sense of you've got this leverage vehicle holding 750,000, 800,000, almost heading towards 1 million Bitcoin. Like at some point in the future, MicroStrategy is going to be holding, seven figures of Bitcoin, which is, $50 billion to $100 billion worth of Bitcoin, and they've got these interest rate payments. It's all very unstable. It could all really unwind in a very ugly manner. Hopefully not. But in the short term, if he's able to raise capital promising interest rate payments in the future to invest in Bitcoin today, that's going to theoretically push prices upwards. So, but it depends on how much you can raise as well, right? I mean, it's going to be if it's like a few hundred million here and there. It's the Bitcoin market is so liquid, it's like insignificant on the price either way. It's just if he can like really load up, which he has done in the last month. He bought, in the last month, it's like many, many billions of dollars worth of Bitcoin, and I think that in itself is probably the reason why. As well, like Bitcoin has done relatively well in the last month compared to, certainly compared to what it's done in the prior 6 months, but at least compared to gold, say, for example.
Yeah, no, definitely.
I mean, that's just something that I'm watching, which I guess is your question there.
Yeah, no, totally. 100%, dude. I think that's, we've had a lot of conversations pertaining to Stretch, and I think they're just going to they're going to keep happening. I hope he found the solution, and he's able to keep an asset that just sits around at $100, delivers all dividends. He can figure out a way to get people high return. Like that would be sick. I don't know. Maybe I'll take part at some point, maybe if it ends up being the thing. But he's got some cool products. I don't know. It's so much of it. Some of it is just entirely reliant on Bitcoin going up. And I don't know. That's just
it's like make no mistake about it. Over the long run, this thing will absolutely fall apart if Bitcoin doesn't appreciate. Like it's 100% reliant on Bitcoin going up. But Michael Saylor would say, and that's my bet, and I'm like, that's the bet. And I don't think there's anything wrong with that. Like it's like this relies on Bitcoin going up, and Michael Saylor will be like, I think Bitcoin's going to go up. So, so I think as long as you understand, I think the tricky thing with these products is, do people actually understand the bet they're making? Like, I think that's the thing with, I guess it's like with all, it's the point you made with the rec share stuff. Like it's fine to do trading and all this kind of stuff. It can be great, but do you actually understand the bet you're making? I think that's the key thing.
Yeah, and hopefully people are learning. That's the goal of these spaces, the streams, like all these discussions we have, is just that you start to see and feel where the borders are. You start to like not just be, walking through the dark with your eyes closed, blindfolded, and not knowing anything. You don't know your face from your butt. Like, you know what I mean? Like you just don't want to be walking these markets. You got sharks out here who are, and like Thomas mentioned earlier in the stream, like you got dudes and girls and guys out here who are fully insider trading. They got lights on, flashlights on, they got a map, they got everything they need. You're trying to walk around with no edge. And so, hopefully you with these spaces and streams, you understand that, hey, you have to get an edge, B, you have to be aware of these things and see there are tons of opportunities. There's a bull market somewhere, there's a bear market somewhere. You can get good at this if you pay attention. Otherwise, it's just food for thought. It's better. I think it's better to just be slightly aware of what's going on in the world. You don't necessarily need to be tuned in every single day with us. We're maybe slightly obsessed with all of it, and it's just what we enjoy talking about. But dude, Thomas, it's a great stream, man. I appreciate you coming on, man, as always. And for people who are watching back at home, take a second and repost the stream if you enjoyed it, and be sure to follow Thomas if you're not already. Right above us, he's tagged. You can give him a follow there, especially if you keep up to date with what's going on in the Bitcoin and Bitcoin ETF inflows and outflows world as well. Definitely give him a follow, and follow here at ETF Tracker and at Wolf. And we'll see you guys all in the next one. Thomas, any final thoughts?
No, that's it, man. You got it. Well done.
Right on. Absolutely. Guys, if you're